Hello there, Maverick Traders. This is Rob Reinhold, and it is the Trading Room again. We are moving into our second week of October, so let's get into it. In this session, we're going to be talking about the news of the week. We're going to be talking about the employment report, which was a very big deal. Then we're going to break down each sector, score them from a +3 to a -3, and then we're going to find some stocks in those sectors, and those are going to be some trades for the week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, now if we take a look at just the numbers last week, they looked flat for the week, but they're bullish. And I want to kind of go through this because every single day we kind of had a challenge. We had lots of things happening in the Middle East, and we had oil spiking, we got gold spiking, we got the dollar spiking, we got bonds spiking. All of these things are typically what people buy when they're worried about things. And when that happens, typically we see the stock markets go down because people don't want that risk. It held in there really, really nicely this week and ultimately closed slightly higher for the week. One of the big news I want to talk about is the Mideast tensions. They have really ratcheted up with now Israel attacking Hezbollah in Lebanon, and Iran actually fired missiles into Israel, around 200 missiles. And one of the things that really shook the market was that it was announced that Israel was discussing with the U.S. about how to strike Iranian oil facilities. Now, that was what got the market's attention. And look, the stock market is kind of a jerk. The stock market doesn't care about human casualties. What it does, it cares about money, and it cares about supply and demand. So we have people dying over there every single day, and it's a tragedy. Yet the market has pretty much marched onward. Once the oil in Iran was actually threatened, the market freaked out, the stock market dropped, and the oil market popped up and went crazy. Everything was all calmed down by the end of the week because the U.S. payrolls report absolutely crushed it. And before the report, there was about a 30% chance of a 50 basis point cut on the next meeting. And then after today, it's basically zero. It's totally down to zero. So the next cut is likely to be 25 basis points. Let's go through some of the economic news because we got quite a bit with this being the first week of the month. We got ISM manufacturing, which was weaker than expected. This number has been weak for about the last 2.5 years. It just can't seem to get going. But we did get some jobs numbers. JOLTS job openings went higher. And then on Wednesday, we got ADP employment that was higher than expected. And all of this set up for the Friday report, which was just an absolute home run. This number, way better than expectations, and it was actually a hot number. Now, let me tell you what I mean by hot number. As inflation is cooling down, the Fed doesn't want severely above estimates when it comes to economic reports. This was a sizzling hot number, a great number, and the markets didn't really freak out. Now look, the bond market spiked up. The bond market spiked up, the dollar spiked up, but it's not like a crazy spike. Now, if they go significantly higher next week, it might be a problem for the market, but the market cheered it. The market closed at its highs on Friday. Now, the one report that I thought was the most important report of the week was this one right here, the ISM services. Services account for 2/3 of the U.S. economy. This number was a great number, 54.9. Estimates were for 51.7. This number had been coming down, and 50 is no growth and no recession. So it was getting closer to that 50, and then look at this, a big rebound higher. This basically told me on Thursday the U.S. economy is not slowing down anymore. It's actually reaccelerating. So everything came together in the markets. We had a very tough week in the markets, and yet by the end of the week, everything was flat. Everything was flat except for oil, up 8.5%. But let's take a look at the charts because I really want to focus in on the candles of this week. Here's the first 4 days of the week. You can see that Monday was a decent day, but what I want to point out was all of these days have long lower shadows. Check that out, long lower shadows. Long lower shadows, even on Friday, long lower shadows. What that means is at one point, there was severe selling, and then it bounced up. At one point, severe selling and it bounced. Severe selling and it bounced. Severe selling and it bounced. That was a sign that there are buyers out there. Even on Friday, the selling came down, it bounced. Lots of buying by the end of the day, which tells me that people are wanting to get in. And that Friday candle, beautiful hammer candle, I don't see any reason why we don't break to new highs next week. I just don't see any reason why that won't happen. We come over here to the NASDAQ. We had a pullback, a little bit deeper pullback, but it held on to some support levels, and you can see had a nice bounce on Friday. If we take a look at the heat map, can we see where the buying was? Well, there's one place that sticks out, energy. We have been bearish on energy for about the last 3 or 4 months. And I know that it's been a good trade for me, but not this week. This week, all my trades in energy sector were reversed. And this is where, as trend traders, we know exactly how it's going to go. We know trends typically go further than we think they are. So we just ride the trend. And we don't try to be smarter than the trend. We just ride it. And then when it ends, we're going to take a little loss at that moment. And then we just simply go the other direction. We've been riding things like utilities and things like industrials. They've been running now for months, and we've just been riding them. 2 weeks ago, we said that the healthcare and the real estate sector had reached their peak and were now declining. And sure enough, those have been the 2 weakest sectors. So look, whenever you are a trend trader, you have to know that you will get hit on trend reversals. That's just how it works. But the point is you make enough money on the way up or down to where when that turn happens, it's just simply a small loss. I have not changed these bullet points for the last 3 weeks. Bullish market, plug your nose and buy. Now look, I think I've pretty much got all of our traders on board. I've had a lot of emails of 3 weeks ago and they say, Rob, I know you're bullish, but I'm just not bullish. And I've been hammering and trying to hammer in these sessions to be like, hey, look, that is your bias. It's clearly bullish on a stock chart. And look, you can feel bearish. You can feel like the world's not going the way you think it should. You could feel all these things, but that's outside of trading. Trading, you trade the chart. So if you think it stinks, plug your nose and buy. I also have been saying that we need to understand how far we've run this year, where we're going in the last 3 months. We have an election coming up. I said I think the velocity is going to be slowing down. So, the months where we were, getting 5-10% returns a month, we're probably going to not see that. I think it's going to be a much slower grind higher until the election. Think about where we are. We are roughly 1 month away from the election. If you were an investor looking to put a large chunk of money into the market, would you do it now or would you wait till after the election? Probably you'd wait. So again, another reason why I think we're going to start to see some slowing volatility and velocity into the election. And of course, economic growth is what we're looking for. And I put that because next week we have an inflation report. For 2 years, we've been talking about the CPI and how big of a deal it was. Guess what? It's no longer a big deal. No one cares anymore about inflation. As long as these numbers are near here, they could even come in at 0.2 and 0.2 or 0.3 and 0.2, and the market is not going to really freak out. Now, if 3 or 4 reports come in like that, okay, then they'll freak out. But right here, I don't see anything to worry about as far as inflation goes coming up. So this week, as you can look at the schedule, there's really nothing other than that CPI, which I don't think matters all that much. Let's go ahead and score this market. I've been at a +2 for the last 2 or 3 weeks. So everything in here, I said, look, I'm not ready to go to a +3. I said, look, if you want to go to +3, go to it. I'm just going to stick at a +2 because I'd seen this 50-day moving average wasn't really picking up any velocity. Take a look at what we've seen here. We've got turns. We've got turns, so I am going to a +3 in this market, which means that my allocation is going to be the most bullish I allow it. Let's go break down the sectors, and then we'll take a look at some of those sectors. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. All right, this graph looks less impressive because of that huge gain in energy. So because this bar is so big, it smashed all these down. But let's take a look at what the best sectors were. Utilities and comm services, industrials and financials. Now, if you remember, last week and the week before we had 4 +3 sectors, and last week we had 5 +3 sectors. What were they? Utilities, comm services, industrials, consumer, and materials. So if you can see here, 3 out of those 5 went higher. We'll take a look at consumers and material to see if they've changed. But if you stayed with the winners, again, you've done well. I think last week, all of the +3s had really nice weeks. What aren't producing? Real estate and healthcare. We've been consistently downgrading those over the last few weeks. So let's go ahead and take a look at all of these sector charts individually and see if we have any change. Utilities has been a +3 forever, and guess what? Still a +3, it's still performing. Now this is what I'm talking about. When you're a trend trader, we have been constantly long utilities in this whole thing. We all know that utilities is not going to stay a +3 for the rest of our lives. At some point it'll change. But guess what? We're not going to try to figure that out, because I'll tell you what, I used to try to figure it out as a young trader. I was never smart enough to do it. And there's been a lot of people that thought they're smart enough. And guess what? Sometimes you get it right, sometimes you get it wrong. But if you look at the chart, you're always going to be in the right place. So +3 on utilities. This is communication services. It's been a +3 for a couple weeks. And look at this. I just love this little pattern here. Even a shorter pullback than the market. And look at this. We're already closing higher than we did. So this is absolutely outperforming everything else. Here is real estate. Was a +1 last week. We've downgraded now to a 0. If it goes below that moving average, we'll downgrade it even more. And that's exactly what happened to the healthcare sector. Last week it was a 0, and you can see it had 4 out of 5 down days and closed down at its low. Think about this. Look at the big candle on Friday in the markets. This was a down candle. This is a red candle on Friday. So the buying did not come into the healthcare sector. Industrials has been at a +3, and guess what? Industrials didn't really even pull back. It just based. It just high based. This is another sector that is just absolutely outperforming. +3 in industrials. Last week, healthcare was like a +1, +2. Actually, it was a +1 because it was down in here. We're going to upgrade it to a +2, but you can see until it really breaks out of this base, we really can't get too much more excited about it. I do think it's going to break out, but again, that's simply my opinion. I can absolutely wait 2 or 3 days until it actually breaks out and then make a trade. As a young trader, I would always say, hey, I know it's going to break out. Guess what? You don't know anything. You know nothing. The only time you know it's broken out is when it's actually broken out. So it's going to be a +2 in the financials. We come over here to consumer discretionary. It did have a big pullback. It did have a big pullback, and we can't ignore that, but it held. It held its moving average, and then Friday's candle was a really nice candle. So it's going to remain a plus 3, but when I take a look at the plus 3s and I take a look at communication services and industrials, they are way stronger than consumer. So it's still a plus 3, but let's call it a plus 3 minus. Here is technology. It's going to be a plus 2. We have yet to see those moving averages really start to slope higher. A decent chart, but again, it's a plus 2. It's not the strongest sector out there. The other sector that underperformed, that was at a plus 3, is the material sector. And I want you to take a look at, there's 5 red candles. Now, if we take a look at the S&P chart, there were 3 red candles and 2 green candles. This had selling all week long. It's still a plus 3, but we have to take a look at these and say, okay, if I'm looking to be really bullish something, I want to be really bullish in industrials and communication services, not this plus 3. This plus 3 is a plus 3 minus. This is a, hey, I had a big pullback. Why don't you wait and see what happens on me? And last is energy, and boy, energy has been negative for a long time. And you can see for the first time, we are back above all of the moving averages very solidly. And this is a plus 2. Now this is where you may not want to be plus 2 on energy. You may not feel like you want to get all bullish in the energy sector. That's great. You can feel that way. It's a plus 2. It's a plus 2. Deal with it. You've got to get now net bullish in the sector. Here's where we were last week. Sectors getting upgrades, financials and energy. Sectors getting downgrades, real estate and healthcare. So it's still clear where the buying is. Those 5 that were a plus 3, they stay there, but consumer and materials, they're still plus 3s, but they're not the strongest. Comm services, industrials, and utilities, still the strongest. Things that are strong but not as strong, energy, financials, tech, and real estate and healthcare should be where you're targeting some of your bearish positions. Here's where we were last week. We had 4 trades roll off for the week. So we lost a trade in comm services. That was a nice gain. We lost one in healthcare. That was a nice gain as well on Danaher, DHR. We pretty much hit the middle on the butterfly. Our tech butterfly was a loss, and our energy trade was a loss because of that big bounce up. So as you can see here, we are left with pretty much only bullish trades here. If we go to our allocation, we have moved from a plus 2 to a plus 3. So plus 3 means these are our trade slots. We can have up to 2 trades at a plus 3 where we're swinging for the fence. Where we're saying, hey, we think this is going to be a home run. We have 4 that are pretty aggressive but not crazy. 3 that are plus 1, and you can see our allocations for the rest. As I said earlier, we are pretty much we already have 4 trades at plus 2, 2 at plus 1. I'm going to be adding a plus 3 in comm services. I probably like the industrial sector better, but I've already got a plus 2 there, so I'm going to put my plus 3 in comm services. I'm going to put a plus 1 in energy, and I got 2 bearish trades at a negative 1 on our weakest sectors, real estate and healthcare. Now look, this is the slot theory to where you have these slots available. I don't have to be this bullish. If someone said, Rob, I want to put out a negative 2 out there and I want to have some more zeros. Great. That's the great thing about this slot system is that it gives you the ability to I don't want to get too discretionary here, but it gives you the ability to lean more bullish or lean less bullish. But these slots are absolutely handcuffing you into you cannot take any more than 3 bearish trades. Like, it's just not allowing you to do that. So even if let's say you had 10 trades on, you would have to be net bullish, even if you didn't feel like it, because The slots are saying you have to be there. That's why we like this, as to where it takes away a lot of the discretion, but still gives you some discretion on where you put those. So let's take a look at those sectors and let's find possible trades in these. First in comm services is going to be my +3. And guess what? It is the exact same trade that we just exited. So I had a meta trade on that expired on Friday for a max gain. And here I am back here. Now let's talk about this. I am always very aware of me and my flaws and my personality. And whenever there is a stock that I just exited, whether it's a gain or a loss, and I look to trade it again, oh, that's where my spidey senses get all tingly and say, whoa, 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 whoa. Why are you trading this one again? A lot of times we fall into the trap of revenge trading. Like, oh, this was a loss last time. And so we purposely look for this trade to, quote, make our money back. Now, this is the comm services sector. There's 50 stocks in the sector that I could have picked. Why did I pick Meta again? I just got out of it. Do I have emotions tied up in it? Do I think that because I made money this last time, that I'll make money this time? Guess what? The previous trade I did has no bearing on this next trade. So I'm always very, very paranoid when I trade something that I just got out of. However, this is the best looking chart. I challenged myself. I said, hey, there's all these other trades. Why don't you pick another trade? Just pick something else. But when I went through all the charts, this was the best chart. It just is the best chart. It is one of my favorite chart patterns. It's a high base, but it's a rising high base. And what I mean by that is that these high bases, but they don't even go sideways. They creep higher. They creep higher and then they break out just like this one is. So here we are, 600. There's probably going to be a little short-term resistance at 600 like there is at round numbers. But look, this thing just looks fantastic. It's a breakout. And if you go back, this base was about 3 months where it broke out. Everything looks great. I'm doing a +3 trade on this. So I'm going to be going fairly aggressive here. I'm looking at the October 26th, 600, 615. So this thing is going to have a big move here for me to have max gain, but I'm giving it more time. So I'm giving this one 3 weeks, 3 weeks for a run here up above that 615. If you don't want to be that bullish, look, there's other trades you can make. You can do a +1 trade, a +2 trade, but I determined I'm doing a +3 trade, and this is my favorite chart in the sector. Next up are our 2 bearish trades in real estate. Now remember, I'm doing -1 trades. -1 trades they're both theta positive and they've got a little delta. So they've got a little bearish delta and they got positive theta. So I don't need this one to fall apart. All I need for this one to do is just to not go up. Now there's only $5 strikes here, so I'm looking at the 80.75. Now for me to get the right credit on this one, we may need a day or two for this thing to go higher. I'm looking for a 60 delta on this one, so I need to pay about 60% of the spread. So I need to try to get this for around $3, maybe $3.50 at the highest. So we may need a little bit more of a run. I just really like this stock chart. If I can't get it, I will find something else in the real estate sector. But that is the trade, the October 18th, 80.75 bear put spread. In the healthcare sector, I talked about this one on Thursday, and it went down on Thursday. And guess what? Here we are on Friday. Look at these candles. These candles are bad. These candles are really bad. We just fall. We have little rallies. We fall. This is Moderna. It's in its March of Death. That's what we call this, the March of Death. And in the March of Death, you just get short and you give yourself time. You either go super short term to where it's like, okay, I'm going to do this for 1 week. And again, this is the 60-60. So basically, you're looking to play it that much. That is not much. It just has to close below 60 If we want to go out 2 more weeks to get a little bit more bearish delta, then you're going to go to the 61.59. And I just want to show you, we're not looking to play this much. That is the spread we're looking. So it has to be below 59 in 2 weeks. That is not a super aggressive bearish trade. Moving on to energy. I'm just going to go with the XLE. Now, the reason I am doing this, I went and looked through many charts. The charts that I liked, I couldn't find the options that I wanted on them. And it seemed like energy had 2 types of stock charts. Stocks that have broken out and run 10, 20, 30% over the last week, or stocks that hadn't gone anywhere and had underperformed, which I don't want. So I didn't want to pick the ones that had gone up substantially this week because I don't want to be chasing them. But I don't want to go after the ones that didn't even move this week, even though like oil was up 9%. If you didn't move as an energy company when oil was up 9%, you're not going to move for anything probably. So a lot of times when I can't find the stock I want, I say, you know what? I'll just do the sector ETF. I'm at a +2 on the energy sector. I'm looking to do a +1 trade in the energy sector. So this is where, looking at this, we just have to decide, okay, +1 means I don't really need this to go up. I just need it to hold. So this is going to be the trade here, +1 here, the 92.9350. So again, the 92.9350. We're basically saying if you close above 93.50 by Friday, that's going to be a max gain for us. It's going to cost us about 60% of the spread. That's where we're going to be on a +1. We're not asking this thing to do anything crazy, just to hold. If there is any more unrest in the Middle East, this likely continues to push the energy sector higher. All right, now those are the 4 trade slots I have. Look, there's lots and lots of trades out there. Just identify in advance the sector you want and how bullish or bearish you're going to be, and then find the stock chart that fits that. Remember, when you're doing a +1, you don't want a stock that's going to go from 50 to 80. That's the wrong stock. Now, it's bullish, it's great, you'll make money, but that's not the right stock for what you're looking for. This is where it really bugs me when I see our traders only trading Tesla, only trading Nvidia, only trading this, because it's like they're always looking for +3 trades. And if you're always looking for home runs, you're going to have a ton of strikeouts, just like in baseball. Sure, you might hit some home runs. Sure, you might be good enough to make it. But for the most part, you're going to have a ton of strikeouts. Choose the right stocks for your slots. If you have any difficulty, jump onto the forum at maverickTrading.com. Let's keep the chatter going. Share some trades with other traders. Discuss them. Let's make sure that everyone is helping each other out. All right, let's wrap this up. The markets are bullish. I think even my most perma-bear trader has come around. I think they finally come around, which always gives me a little pause, like, hey, that's kind of when the market tends to top out, is when even the most stubborn perma-bear finally gets bullish. That's actually kind of a little warning sign to me, like, oh, this market is too optimistic at this point. But look, I don't think we're there. We just had a great jobs report. We're going into an election. There's a ton of money being spent on advertising. After the election, sure. But I think going into the election, I don't think it's going to be a huge run, but I think it's going to be a slow and steady run for the next month until we get the election. And then, guess what? All hell could break loose. I have no idea what's going to happen. But I really like this period of time over the next month. So look, if you're bearish, just move your bearishness till after the election. Say, you know what, after the election it's going to tank. Follow the charts. The charts are telling you where to be. Everyone have a great weekend. Thanks for joining me. Goodbye, everyone.